Regulatory concerns likely weigh on the EV space. Those regulatory tech concerns in China weigh on the EV space. You just mentioned Didi. Of course, we've been following that story today. Is that a threat to the EV sector in China?
Welcome back, friends, for one more update from the world of EV stocks. In case you're new to this channel, please do consider subscribing. And if you live in the United States, you can get 2 free shares worth up to $1,850 just by following the link in the description. Now enjoy the rest of the video.
We made a video yesterday about how the concerns surrounding crackdown on Didi were causing downward pressure on Chinese stocks. Well, the panic just got stronger today, and in the intraday trading, NIO crashed close to 10% just today. The drop is quite concerning since most NIO investors have been looking forward to an upward breakout after many months of consolidation. CNBC talked to an expert from China and tried to understand how much these concerns about NIO and XPeng are rational at the moment.
Consolidation a little bit earlier on. Is the EV space, particularly in China, becoming too crowded, and which players could likely consolidate?
Well, if you're thinking about that, car companies or car industry in particular is unique in the sense is highly fragmented at the moment. And so if you're looking at ride sharing or any other industry, there won't be so many players. So I would think going forward as, the 3 new EV upstart, NIO, XPeng, and Li Auto, for instance, at some point if they merge, it shouldn't be too much of a surprise. After all, Didi was a merger as a result to arrive the prominent position. But on top of that is also OEM, the traditional OEM, whether it's Honda, Toyota, Daimler, and VW. These are a lot of brands. At some point with market pressure, if some of these getting forced out from the Chinese market like other industry would, it shouldn't come off as a surprise.
How much will regulatory concerns likely weigh on the EV space? Those regulatory tech concerns in China weigh on the EV space. You just mentioned Didi. Of course, we've been following that story today. Is that a threat to the EV sector in China?
So I think we need to come back down to the Chinese regulator motive. It's very easy to extend the logic on the regulation of Didi into the EV sector, but they are not the same thing. For one thing, Didi is really a monopoly within the ride-hailing economy. The only way for a platform like this to win is to achieve a monopolistic position in every single city. That is not the case in EV. I mean, you have foreign companies, you have domestic company, you have traditional company, the new entrants, all fighting for their own life. So the whole monopolistic argument doesn't apply here. Second, is this EV company, particularly the Chinese one, are massively going abroad as well. I mean, NIO is expanding to Norway, and all of these EV makers can export their product overseas. And as a result, it's a very different type of companies who can bring revenue back home, unlike Didi, who's only making money out from their domestic market. So the regulatory regime looks quite different.
Right. Final question for you. How do these EV makers mitigate the supply chain crunch that we're seeing at the moment? Do they simply team up and build their own chips and batteries?
You're beginning to see something like that, right? The push for Chinese automaker in trying to become self-sufficient. And the best example would be BYD. They're not just making battery, they don't just make electric buses and car, but they also have their own semiconductor unit and it's about to go for IPO. I think that is a possible route to secure the global supply in semiconductor. After all, industry experts have predicted even for next year that would continue to have shortages, and given how expensive it is to build a factory around semiconductor, the only way to do it quickly by the Chinese way of scaling and scope and capital intensive operation is probably do it in-house. And maybe BYD would also entertain contract manufacturing as well as they expand that part of the business.
We agree with the points mentioned by the expert on CNBC. What we are seeing in the markets currently are irrational fears, and that is only creating a dip in the prices of NIO and XPeng in the short term. Needless to say, the dip is a great opportunity to enter into these stocks again. We don't know how much further NIO might dip, but we won't be surprised to see a sharp reversal in price very soon. It is important to remember that a company like NIO is vastly different from Didi. NIO is a globally expanding company, with an increasingly global character to it. So, we don't see any regulatory risk to NIO coming from China.
After huge moves in 2020, Tesla and Chinese electric vehicle stocks NIO, Li Auto, and XPeng cooled off for much of this year, while Ford and GM took the spotlight. But as growth moves back into favor, EV stocks are revving higher in a big way. Here to break down the ins and outs of the electric vehicle market from an investor perspective is IBD News editor Ed Carson. Thanks for joining me today, Ed.
Thank you, Allie.
So when people think of electric vehicles, Tesla, of course, comes to mind, but traditional automakers like Ford and GM have serious EV ambitions as well. China EV stocks are back in focus too. So what's your assessment of the competitive landscape for the electric vehicle market at this juncture?
Well, it's a really fast moving, it's a big, fast growing market. You sort of have the four tiers. Yeah, on the top, you have Tesla sort of standing by its own. Then you have companies like NIO, Li Auto, XPeng, which actually are producing cars and growing rapidly. You have the startups like Fisker, Rivian, which will supposedly be delivering cars in next month and having an IPO, a lot of cars like that. And then you have Ford, GM, VW, and all the other traditional automakers coming in. It's a really interesting mix of innovation and traditional manufacturing expertise. It's demand driven by regulators in many ways rather than consumers. So it's a very interesting market, a lot of opportunity. There's going to be a lot of losers in this market too, presumably.
And it's not just the quarterly reports that have the potential to be big catalysts for some of these stocks. You have monthly production figures, special events, and other announcements. Ford, for example, got a boost on its EV F-150 launch. So there are a lot of headlines with the potential to really move these stocks.
Yeah, absolutely. Monthly figures. It's interesting. Companies usually, they aren't too excited about, boy, we're going to spend tons of money that might impact our profits. But, when General Motors says we're going to revamp a bunch of plants, that can get the stock moving higher as well. There's a lot of things that can drive the stocks right now. People are very excited about progress. And it's not just about the numbers today. People are looking for growth in the future. If you're betting on these stocks, whether it's Tesla, NIO, or even something like Ford, the EV nature is something you're expecting strong growth for years to come, not just today. And so anything that people see from announcements that suggest that there will be further growth going forward, that people are going to take advantage of it, is likely to be a catalyst for these stocks.
And the chip shortage is also talked about a lot in tandem with the auto industry. So how is that impacting the equation for these automakers?
I mean, it's sometimes going to be a hit or miss. NIO in particular has acknowledged, yeah, we haven't been able to make as many EVs as we'd like, and it's something that's hit the whole industry. On the flip side, there's a sort of a general positive because the cars are chips are in short supply, cars are in short supply. Tesla's been raising prices this year in the U.S. Basically, everybody has pricing power. So whatever they are selling, they're selling at a premium, despite which you might expect increased competition in 2021.
Now, when it comes to the China EV stocks in particular, there's potential regulatory risk related to China and accounting related risks as well. What should investors keep in mind when they're looking to invest in these China EV players specifically?
It's just something that with any China name, when you're investing in that's always an added risk factor. Now, some of these companies have been around a little longer. So, you might feel like they're less likely to fall into accounting issues, but, you just never can tell. And on the regulatory front, if China wants to turn on a dime and say we're cracking down, they can crack down really fast. And there's not a whole lot companies can do about it. Tesla's faced a little bit of seeming some pressure, not nearly what Alibaba's faced earlier this year, the Chinese e-commerce giant, but that's always sort of an existential risk. In the US, you're not worried about a regulator just literally just stomping down and crushing a company out of existence. That's actually something you could potentially worry about in China.
Mm-hmm. And these EV stocks have been pretty hot lately, but with any hot trend, you don't want to just be blindly buying because you're seeing that it's a hot trend. It's still important to do that due diligence, that analysis, not just on the fundamentals and the trends impacting the group, but taking a look at those charts as well.
Yeah, I mean, I think you really have to pay a lot of attention to the technicals, especially since you're betting on future growth. You can look at the fundamentals and that's great, and that's important, but the technicals, like with Tesla's a great example, a tremendous run in 2020, but there were times like if you had bought it, say at the peak in February 2020, the temporary peak, it just crashed like, 40%, 50% from there in a matter of weeks. So if you bought at the right times, you often could get really big gains very quickly. So look for those buy points, look for those key resistance areas. Don't just buy willy-nilly in a stock, because some of these stocks might be on a good trend and then they'll just fall 30%, and you don't want to be caught out of that. You want to buy at the right time so you take part in a winning trend, not chase it afterward.
Always important to remember. Ed, thank you so much for breaking down the driving forces behind the EV industry. We really appreciate it.